Hello and welcome. This is your weekend market analysis for the 5th to the 9th of June 2017. Well, without any waste of time, we are quickly going to look into the Forex economic calendar to see those high impact news announcements, those monetary policy statements that are scheduled for this upcoming trading week. Alright, you are now seeing my Forex factory economic calendar, and right here we are seeing that Monday, which is the 5th of June, has bank holiday. Alright, holiday from Swiss, from Euro. These are the bank holidays for Monday. Okay, usually bank holiday tend to slow down the market momentum or even give us abnormal volatility. So Monday might not be a very nice trading day for us because we need momentum in order to have our trading strategies perform optimally. Okay, all right, so you want to take note of those bank holidays for Monday because they can impact negatively on this currency crosses. Okay. All right, we have interest rate scheduled for the Australian dollar on a Tuesday. You want to keep that in mind. This can actually cause heavy volatility for the Australian dollar crosses on Tuesday. Then the parliamentary elections for will be holding again. All right, for the United Kingdom. So you want to be careful trading all sterling pounds crosses on Thursday, June 8th. All right, this the outcome of the election itself can also impact on the sterling pounds crosses. Interest rate is scheduled for the euro. Okay, you can see right there that it was left at 0%. So we are also expecting that there will be no changes to the interest rate, the euro interest rate. But then you want to keep in mind interest rate can cause abnormal volatility for all euro crosses on Thursday. Okay. All right, on Friday we also have employment change and unemployment rate coming for the Canadian dollar axis. This is a powerful news announcement. Usually it is released together with the non-farm payroll, but that was not released on Friday last week, so it has been shifted to this week, Friday. So we will be trading this again just like the non-farm payroll on Friday this week. So this is one event that we will be trading for this week. Okay, in general you want to be careful trading within the news release hour of all of these high impact news events. You want to really pay attention to them in order not to be trapped within those announcement hours, because price can invalidate any setup, no matter the trading strategy you are trading. Okay. All right, enough of this. Let's now quickly move into the charts and see what we have waiting for us. Okay, this is the euro against the American dollar across or currency across or pair. The weekly time frame, remember we talked about a bullish bias. All right, price is heading to retest that upper channel leg. Initially for last week we thought we are going to see some pullbacks before price pushes to the upside, but that pullback didn't happen. Price rather kept pushing to the upside as of last week, especially when the NFP news release was pumped into the market. We saw that momentum push to the upside. Okay. All right, now the euro against the American dollar still have that upward bias. Price is still bullish, and the optimal resistance area that price is heading toward hit is this upper channel leg. So we have a little room for price to push to the upside. You want to keep searching for long opportunities in the euro against the American dollar. In the intraday time frame, there is absolutely nothing there. What I just want to share with you is that price action here is quite difficult to analyze. All right, the wider picture here is just a channel, but within this channel you can also find some internal levels of support and resistance. For instance, if you connect all of these highs that price has been retesting, you can see how price bounce off that level, bounce off this one and this one here. You can see that price gave us that breakout pullback or continuation push of that very particular line. Okay, so it is quite difficult to analyze the price behavior in this kind of price action, but at any rate, we are still bullish in the euro against the American dollar, searching for only long opportunities. All right, let's look into the next pair, the Swiss franc against the Japanese yen. This is the weekly time frame. Price is very tricky here. Last week we saw that pin bar right there, but then we have cancelled our order because reanalyzing this chart indicates that price is still bullish, so we might see a little push again to the upside, then hopefully maybe a channel formation or something somewhere in the area. We might have price come back down, but for now there is nothing valid here for us to trade. We are not involved in any short opportunity there. Our price still has some momentum, steam to push to the upside, so we might see price pushing to this area before seeing possibly a fake breakout to the downside. So for now we are still watching price action, waiting to see what reaction we get off that level of resistance. Let's take a brief look into the daily time frame to see what we have. Our daily time frame, the Swiss franc against the Japanese yen, we are having a flat top triangle. All right, that's the flat top triangle, which is an indication that the bulls only took a breather and will soon keep pushing to the upside. So you want to only search for long opportunities in this currency or pair. Price should break to the upside, any pullback again push to the upside, but it is quite mixed right here. All right, this is a heavy level of resistance and we don't want to go long against that level. It is obviously best to allow price react off that level before you want to trade. The price action we are seeing suggests a bullish push, but then we are not comfortable clicking on our buy button. We want price to react, giving us a clear hint of what directional bias it's going to take around that area of resistance. So you want to allow price move away from this junction of the chart before you want to keep trading. Okay, if at all you must trade, then keep searching for long opportunities. Let's look into the next pair, the Canadian dollar against the Swiss franc. This is the daily time frame. Price is obviously pushing to the downside, and as you can see in the daily time frame, we had a flat bottom triangle that has been broken. All right, that flat bottom triangle has been broken, and the daily time frame is calling for a downward push. Okay, it's calling the daily time frame of the 3 SMA trend filter is calling for a down trend. So let's see what we have with that trend field, with the trend, the 3 SMA trend, 3 SMA indicator. All right, I have just fired in the 3 SMA indicator, and you can see how that was the first bounce, although the 100 3 SMA indicator was hit, which was really bad. That is not something we like to see when trading the 3 SMA strategy. Then we have this breakout setup. As soon as the dynamic area of support and resistance catches up with price, we got that breakout. Okay, that's a valid breakout, that's a valid setup. But then the entry area here, if you are to enter somewhere in here, is quite far away from the dynamic area of support and resistance. That is not what we want to see. At most, at any rate, we want the entry to be very close to the dynamic area of support and resistance. In this case, this is quite far, so we are not interested in taking that entry. Also, you can see that we have very little room to the downside, as the weekly level of support is lying right there. So we'll be trading against that weekly level of support if we take that entry. So this trade should have a very poor risk reward ratio. In the 4 hours time frame, which is the trigger chart, we already had the breakout pullback continuation formation. You can see that breakout pullback and continuation move. If we were to be trading this, if everything was okay, we would have placed our sell stop order right here. Our stop loss would have been somewhere in here, but then we are not comfortable trading this because the dynamic area of support and resistance is quite far away from current price level. Okay, so we are not taking this. This will be selling at this bottom right here. We are not ready to do that. Okay. All right, the next one is the Australian dollar against the Swiss franc. This is the weekly time frame. Remember, this was a level of support that we were watching. We're waiting to see if we get a bounce or a breakout, and we have a breakout right here. You can see how price has successfully pushed below that level of key support, and the price has closed below that level as of last week. So we are comfortable right now searching for short opportunities to the next level of support. Okay, so in our intraday trading, we will be searching for short opportunities in the Australian dollar against the Swiss franc. So let's see the 1 hour time frame. We have a valid price action right here. This is a 1 hour time frame. Nice fall to the downside. That's a move. This is a congestion. So we are now waiting to see if we find a breakout for the pullback and a continuation move. This is a high quality market flow setup. If price gives us that required breakout, pullback, continuation move, it is a high quality market flow setup. You can see how price has hit this level here more precisely as a support. If we find valid solid breakouts to the downside, we need to wait for the pullback and trade the market flow strategy. Okay, trade the market flow strategy. This is a high quality setup. This market flow strategy is trading a continuation move, which is the direction of this original push. Okay, so keep this in mind. Let's move into the next pair, the sterling pounds against the New Zealand dollar. This is the weekly time frame. Price is trading around a level of support. All right, a key level of weekly support. That means you want to be careful going short against that level of weekly support. So in the 1 hour time frame or your intraday time frame, you want to be searching for long entries. Let's see the 4 hours time frame. Okay, let me just take out all of these lines so you can get that clear picture of market confusion that you can see right here. All right, we have an expanding triangle. That is the upper leg, and this is the lower leg. Price still has some room to push to the downside. Usually you will find this sort of market confusion around the key level of support and resistance. You either find an expanding triangle, you find a channel, all right, price swinging up and down, or you find this type of channel. You will usually see some of these ugly patterns around key levels of support and resistance. Okay, once you see them, you want to be careful searching for a trade against that key level of support and resistance. So that means for the sterling pounds against the New Zealand dollar, it is quite risky looking for short entries around this area. Rather, you should be waiting around this lower triangle leg somewhere in the air. As price comes right here, price might bounce to the upside. Let me bring back those lines. Okay, all right, those lines, let me just try to select all of them. Okay, now this is the weekly line that I was talking about in the weekly time frame. So let's move into the 1 hour time frame. 1 hour time frame, we got price breaking a key level of support as of last week of Friday. All right, that's a key level of support. So we still have one last chance to look for short entries in the sterling pounds against the New Zealand dollar. Just one last chance. If price is able to push from here on to this point, that is where you want to look for short entries. Okay, that will be a valid one. You look for short entries from that point in the year, and of course you are trading the market flow setup. This is more of a congested area. Then we got the breakout. So just wait for price to move to that point and search for your short entry. In the other hand, if price is able to push from here on to the downside right here, you should be looking for long entries, but this is not in line with any of our trading strategies, so we will not be taking this one, but if price is able to push from here on, we will be taking this one as a market flow setup. If price push from this point down here, this is more of an aggressive entry, we will not be taking this one. Okay, but you can risk it. It might happen. If it does bounce off this level, then we are going to be having a fake breakout at that weekly level of support. Okay, at any rate, it is best to buy at this area. You don't want to go short right there. Okay. Alright, so whatever happens, of course, I will be in the live broadcast room to analyze that more again. Let's look into the next one, the euro against the Japanese yen. This is a very highly correlated pair to the Swiss franc against the Japanese yen. This is the weekly time frame. Remember, we had earlier projected a channel formation in the weekly time frame, as price is most likely to swing up and down within this channel range. Okay, so what do you need to do? Like I said, this is an optimal sell zone. If you find price banging off that point with any reversal formation, then we are likely to come back down from that point on. You don't want to go long around this blue line. What you want to do, if at all you must go long and stay very briefly, you have to close all of your longs around in there, because price might likely begin to push to the downside. This is a proposed area of resistance, and we might see some reactions of that point. Okay, all right, let's now look into the 1 hour time frame to see what we have. A 1 hour time frame, the euro against the Japanese yen, we have a price trending initially. All right, price was trending, and eventually that trend line got broken. This might not give us a valid trend collapse entry. All right, the breakout went too far away. By the time price is going to crawl again to the upside, that trend line will be too old, so we cannot trade the trend collapse strategy right here. Rather, what we'll be looking to trade on Monday, although we have bank holiday from the euro axis, if we find that sideways Tokyo range in here, we will be looking to trade the London open breakout strategy, because this is more of a reversal move. All right, if we get this sideways Tokyo range, then we'll be looking for a breakout to the upside or to the downside. So at any rate, just to keep this chart, but I can tell you we might not find that trend collapse entry, so you want to rule the trend collapse setup out of this, because price might begin to push, and the likely direction is to the upside. Okay, all right, so let's look into the next one, the New Zealand dollar against the Swiss franc. This is the weekly time frame. Price is finding serious hesitation around this point. You can see that for the whole of last month we were flat around this area. Price did not really take to any direction. In fact, let's take in this, let's show our previous level of support. Okay, all right, there, this was previous level of resistance, acted as support right here, and right now it seems to be holding price around that point as support. So price is trapped within that previous level of resistance. So there is lots of confusion going right on here. It might be, of course, based on the kind of price behavior I am seeing here, it might be that price is bouncing off that level again to the upside. So you want to be careful, absolutely careful, going short with this pair. You want to be careful. Price is very likely to push to the upside. So let's see the daily time frame. Daily time frame right here, we have price, like I earlier analyzed and posted in the forum. Price is moving from channel to channel, where from range to range. This is one range, this is another one. I drew all of this range, and right now we have this channel formation. Remember, I told you earlier on that whenever we have this channel happening around a key level of support, you want to be very careful going short, because it is a reversal sign. Price might push to the upside of that channel. Okay, so for all of you seeking to go short of this point, well, I insist that it is more safer to wait somewhere around in here and go long. All right, because this channel usually breaks to the upside and price might keep pushing to the upside. Going short right here is quite risky. It might move in your direction, but it is quite risky. Okay, so you want to wait for this upper channel leg to give way, then you keep searching for long entries. Okay, all right, folks, this is basically all. Not really much for us to analyze here, especially in the intraday time frames. There is not much of tradable patterns right here, so we will just keep following price and analyzing what we see in the chart. If you have any questions or contributions, please post them in the forum, and we'll be happy to discuss them with you. I am still your moderator, Jacob. I am wishing you a profitable trading week. Cheers and bye-bye.